Good afternoon, everyone, and welcome to our webinar titled Trading the Effects of January. This is the latest in a series of live webcasts offered by TraderPlanet.com through collaboration with well-known industry experts. Today is Tuesday, February 2nd. We're grateful to have you with us today. I am Darrell Jobman, and I'm your host for today's session with Darrell Jobman, a senior analyst for TraderPlanet.com. Today's webcast takes place at a specific date and time, and therefore any opinions given by our presenter may change without notice at any time. Trading involves substantial risk of loss and therefore may not be suitable for all investors, and past performance is not indicative of future results. This webinar is being recorded and will be archived on TraderPlanet.com, so you will be able to review the material at a later time. You can also find additional previously recorded webinars among our other free educational resources within our site at www.TraderPlanet.com. Our presenter, Darrell Jobman, trades his own personal account and has been involved in the financial markets for more than 40 years. A decorated Vietnam War veteran, he has served as the editor for several agricultural publications before becoming an editor of Futures magazine for more than 15 years. He has written and edited more than a dozen book and trading courses on trading. While his mission is helping others succeed by learning the do's and don'ts of trading, his editorial contributions to TraderPlanet.com have permitted him to amplify this passion. We're pleased to have him visiting with us today. Let's give a warm welcome to Darrell Jobman.
Thank you very much for that welcome, Darla. First thing I want to do is make an audio check. Darla was coming through a little erratically a couple of times there when I was listening to her, so I want to do an audio check first to make sure everybody can hear me okay. There's a little man down in the lower left corner of your screen, has a menu by him. If you can hear me and the audio is fine and so forth, click on that menu and then click on I agree. Get a reading here of who can hear me okay. Okay, getting some checks. At least I know my voice is getting heard out there to some people anyway. All right. Now I want to clear the screen now and ask another question. And I want you to keep an eye on that little man because we're going to come back to him later. But I have another question to ask, and this relates to your experience as a trader. Again, clearing the screen. Here is the question. I have seen many Januaries as a trader, which means you're an experienced trader. And if that's you, please check I agree. If you've been through the ropes before in January and you kind of have an idea about January, click I agree. Okay. Looks like we got some traders here who have seen a few Januaries. I know I have also. Speaking of having seen a few Januaries, I want to tell you about our sponsor, CRB Data Research. Provides the data that I'm going to be using in our charts. So they've been around for a lot of Januaries, as you can see, going clear back to 1934. A couple of other housekeeping items. In the lower left part of your screen, you'll also see a box that says chat. That's for questions, and if you have any questions, just either keep them in mind, write them in there or whatever. I will try to answer the questions at the end of the presentation and not during the presentation so I can keep going with my flow. Secondly, when we do get to the charts, you may want to switch to full screen mode so you can get more detail when you look at the charts, determine what I'm pointing to. The first thing you might note, and it's a little different than what you normally would think when you talk about the January effect, because as you'll see purposely on the title there, I put Effects of January on Markets because it applies to several different types of phenomena that are based upon the market performance in January. Now, January effect really applies technically to the tendency of stocks to rise in the first week of January. There are lots of explanations for this. Maybe be due to people selling losers to take tax losses or institutions and funds dumping their losers at the end of the year so it's not in their books. Then they buy them back in January. Whatever the effect is, the tendency over time has been that the stocks will tend to go up during that first week of January. Also, small stocks tend to outperform the broader market. Of course, by now, the market knows all about this and adjusts for this type of action, so it may not be as effective as it once was. It did not work, for example, in the first week of 2007 or 2008 or 2009. But this year, in 2010, the S&P 500 E-mini did close at 1110.75 on December 31st, and on January 8th, it closed at 1141.50. So that was a gain of 2.8%. So the January effect in this definition did work this year. Now, there's another adage that traders are familiar with, and that is, as January goes, so goes the year. Various studies have been done on this effect. There was one that I saw that went from 1962 to 2007, covering 45 years, and it showed that the rest of the year followed the January pattern in stocks 71% of the time. Of the 45 years, January was up 28 times, and when January was up, the rest of the year was up 86% of the time. But when January was down, and that occurred in 17 years, the market followed that down pattern only 47% of the time. Then there's another study that I saw called the January Barometer in Stock Traders Almanac that says the January indicator was accurate 91% of the years, with only 5 major errors since 1950. January and April are considered generally to be the best forecasting months for the year. But then you got to look, what about 2010? And we'll be looking at some of those charts in a little bit. I mentioned that the S&P 500, when it closed at 1110 on December 31st, and at the end of January on the 29th, it closed at 1070. So that's a drop in the month of January of 3.7%, which is the worst month since the infamous slide that we had in early 2009. So if the year goes like January, that's not a particularly good sign. Another January pattern of note is based on the breakouts of the January range. Steve Rizzi of Bullish Review notes that in the case of currencies, a breakout from the range of prices during the first 2 weeks of the year is a good guideline on the direction for the year about 2/3 of the time. Not, a guaranteed solid 100%, but about 2/3 of the time. So, not a lot of good to look at January effect during the first week of the year today, because that's already in the past. So we are going to look at some charts to get some perspective on what has happened on the charts in January and how the rest of the year went in several major markets. Then we'll turn to some more current charts. First thing I want to do is kind of give you a concept. We're going to start with probably one of the more important markets these days, and that is the U.S. dollar index. You will see that on the lower left side of the screen, I'm kind of trying to highlight here what would be January. That's in that little rectangular square that you can see that where January is. This is from 2008, and you can see the pattern during the rest of the year. First, you had a situation where the market tended to